So, some talks out of UAE today. Not much of a change from yesterday. Big push up, and SPX closing above Gamma Max for the third time in the last 3 years. So kind of not a very common event. We did fail to breach Vega neutral on the monthly, and ended up closing at the end of the day just under the upside market makers expected move at 55.86. Those Vega neutral levels are going to probably continue to present some resistance in the near term, and closing above gamma max generally isn't a state that persists for very long as far as like market wide profit taking goes. This is definitely an area where we could see more of that. Obviously, any pullback could see Gamma Max rise again, and that would give us more room to the upside to retest it. Generally, in the other instances, couple of other instances where we've closed above Gamma Max on the weekly, we've ended up back below it the following day. Um, Futures rejected on its second test at 59.2750 and pulled almost immediately right back to 59.50 or 5950 cents. This is probably local support, or at least major local support. Tomorrow, I don't think we have too much data. I think we have some Fed speakers, a Fed speaker, and then some like mortgage data, two Fed speakers and some mortgage data, and then like a 17-week auction, which probably isn't going to matter very much. So a pretty slim day tomorrow on the data. Dollar fell back under the 101 level. We saw a bump in gold alongside that. Yields up again today, but not as dramatically. The 10-year did breach 4.5 earlier, kind of rallied a bit into close there. I went long UB overnight. I think if the 10 year is playing a little bit too hot and heavy with 4.5, we'll probably get some news out of the administration that's not so positive. Oil up on the day, precious metals up, industrial metals up, so commodities having a pretty good day. Across the board, with the exception of agricultural commodities not doing too well. Correlation rocketed down for the second day in a row, but did turn around a little bit there into close on both the 1 and 3 month. Carry trade leverage hit a peak today around 8.8. That failed, fell back to 8.7 here at close, which is a bit surprising given the rise in the dollar, or the drop in the dollar, rise in the yen. And forward yield on volatility is still below zero, but not significantly. We're not seeing the forward yield on vol drop, very much below like 1%. And if we start to see the yield curve turn around a bit, we'll probably see volatility pick back up again. I think it's actually still quite sensitive. 3 month correlation falling, but bond volatility picking up a bit yesterday. Today should be pretty flat, so you might see move back under 100. Skews moving up to the upside, which may have been a fairly good indicator for today's price action. Definitely not a lot of out of the money put interest coming in, but overall skew still very low for the prior 2 years. So the levels we're at, still not a ton of bullishness. I know we're back at like 5,900. It's insane, but short vol isn't positioning as if there's no risk anymore, which makes things actually a lot different than our prior upsides earlier in this year and last year. Correlation between VIX and cash VIX still very high, and so that's kind of that sensitivity I was describing. We're still not seeing vol shorts come in a really meaningful way that's going to kind of upset that. VIX still just a little bit out of backwardation, but barely. And VIX 3 month, still quite a bit higher than VX. Breadth. Breadth wasn't actually that great today. Dow fell. UNH did very poorly. Tech drove most of today's price action to the upside, and then Russell and ES did okay, but not fantastic. Fed fund futures pricing out even more. Basically, only one half of a rate cut by, or well, 0.66 of a rate cut by September. The bear steepener picked up a little bit, not very much. It was up quite a bit higher earlier. And then on the technical side, to the upside, we actually retested the low trend from back in like October of 24. And we failed that test into the end of the day. But still nothing significant to the downside here, unless we lose like 58.37, 57.73. To the upside, obviously, breaking above this trend locally opens up that 59.47 test as we get closer and closer to the early March high, which I think was around 59.86. So it was still ways to go before we even have an actual reversal. But and then technically we don't get an actual reversal till we get, is it? I think it's a new all-time high. Yeah, it's getting closer to being on track with the technical reversal. Getting over March's high is definitely the next step to that. I wouldn't say things are getting grindier here, but we're definitely getting more realized volatility since the gap up. And so I would think that this price action to the upside is extreme enough that we're likely to get a pullback this week. I'm not sure tomorrow, but maybe towards the back half of the week we get a little bit of a pullback. And that coincides with SLD, but remember for SLD, we have a lot of supportive gamma right now. And people selling off to the downside are going to be, the market maker is going to be buying that dip. So probably not going to get like the big like 3-4% move that we've been getting for the last couple of months on SLD. It'll probably be a little bit more muted and a little bit more well supported, but it may have some decent range given how much we've pushed over Gamma Max. We'll also want to see if Gamma Max rose today. That's going to be pretty important for future upside moves. Anyway, that's about all I got. Thank you guys so much for tuning in. I'll see you tomorrow. Later.